The US dollar has seen a down and up price action in trading here today. As we start the US session, the greenback is at its highs, but still a little change against the major currency pairs. In this video, I'll take a look at the euro versus US dollar, dollar versus yen, and sterling versus US dollar from a tactical perspective. So let's get started. There's a report in the Wall Street Journal that the Federal Reserve is becoming more and more splintered as far as those who are looking for a rate cut and those who want to see the Fed remain on hold until the tariff situation improves. We are seeing also increased anxiety about tariffs, threatening a 50% tariff on Brazil, or I guess announcing one, and also having a 50% tariff on things like copper is worrying some inflation bugs out there, and maybe contributing to the ups and downs in the U.S. dollar trading here today. Let's talk about the euro versus U.S. dollar from a tactical perspective. I'm looking at the hourly chart, and if we look at its move in the Asian session, we can see a rotation to the upside. It's a lower dollar after those reports in the Wall Street Journal about the Fed's being splintered, and we saw the price move above the 100-hour moving average. We needed to get above that level. 2 days ago, we came up to that 100-hour moving average, found willing sellers. And then on Mondays, traded the market moved briefly above that 100-hour moving average, only to fall to the downside. In this case, the price to move back above the 100-hour moving average, but as you can see, the 200-hour moving average is now above that moving average, and so we need to get above that level as well to increase the bullish bias. We couldn't do it. We tried to move higher here, tried to move higher right here. Couldn't do it. The market has since rotated back to the downside. As mentioned, we are trading at the lowest level for the euro versus U.S. dollar, the highest level for the U.S. dollar as we kickstart the new trading day, and that is now taking the price below these lows right here, which tried to form a bottom. Admittedly, we've been trading above and below it over the last 4 trading days, so it's kind of lost its luster. I would set this area right here between 1.1663 and 1.1691 as a more important level of support, and that level has been holding support at a level in between those two extremes, mainly above the 1.1682 level. Now, the importance of this area, this yellow area right here, can be seen more closely by looking at the daily chart. If we go back in time to this period right here, April to November of 2021, the low prices came into that area, tried to form a floor right here, broke below the floor, and then used the level as a ceiling before moving to the downside. So that's where that area comes from, and as you can see, since breaking above it, we've been able to stay above that level, although we've been pressing hard against it over the last week of trading, which if broken, would increase the bearish bias going forward. So just be aware of that level, that area, and also watch the 100 and 200-hour moving average on the top side. Let's take a look at the dollar versus yen next, and we'll look at the 4-hour chart for this currency pair. Let's swing it out here a little bit. If we look at the, go even further. If we look at this area right through here, this is where the market seems to stall, and then we rotated back to the downside. We did break back below the 61.8% retracement of the range over the last few weeks. That has taken the price to the downside and then back to the upside. But the movement below that level could not be sustained, and we're currently trading within this yellow area as defined by different swing highs and highs through here, and here. Admittedly, we did break above these areas in this move to the upside, and this move to the upside right through here, and more recently in the move this week to the upside. But if we're able to stay below this 61.8% retracement, below the 146 289 level, then the bias can continue to the downside. Conversely, if we start to move back above this level, we'll start to look toward this swing area once again, the highs for the week, as the next key target on the top side for the dollar versus yen. So be aware of those levels. Finally, let's look at the pound versus U.S. dollar. And in trading yesterday, we had volatile up and down price action, but the 100-hour moving average did hold resistance here. That mirrored similar resistance holding on Tuesday at the highs. In trading here today, the Asian Pacific session, we moved up to test that 100-hour moving average. Since then, we were able to break above that level in the European session. That should have led to more momentum, maybe a move back toward the 38.2% retracement, but it was not to be. In fact, the market kind of held near the high prices over the last 2 trading days and rotated back to the downside. We are trading 2 new session lows in the pound versus US dollar to kickstart the US session, and that moved the price a little bit below the 50% retracement at 1.35786 level. We'll watch that 50% retracing level to see if there's an increased momentum below the midpoint level. That's of this move up from the June low to the June high, which occurred over these 5 or so trading days a few weeks ago. So watch that level 1.35786 for little clues intraday. If we do move below it, we'll look toward this low and this low. Admittedly, in trading on what is that on Tuesday, the price did move below that level, but quickly snapped back. We'll watch that level once again at 1.3561 level. If it breaks, then we'll look toward the 61.8% retracement, which was near our low price for the week. So there you have a look at the 3 of the major currency pairs to kickstart your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.